Welcome, and thanks for joining this short module on the essential functions of central banks in modern economies, presented by Dr. Microlearning. Over the next few minutes, we'll unpack what central banks do, why they matter, and how their tools shape economic stability, growth, and global coordination in an increasingly interconnected world. This presentation is organized to guide you from a broad overview into practical roles and policy tools, then into system stability, currency management, research, and finally international cooperation, so you'll get a clear sense of both the institutions themselves and the mechanisms they use to support economies and respond to shocks. Part 1 starts our journey with a clear overview of central banks and their role. We'll look at where they come from, what they aim to achieve today, and how their core objectives, like stabilizing prices and supporting employment, fit into the wider economic framework that affects everyday people and markets. The idea of a central bank grew out of a need for monetary stability and orderly public finance, and today their objectives include controlling inflation, supporting employment, and maintaining financial stability. The historical library image reminds us of that evolution, while the team photo points to modern, policy-focused institutions working to balance multiple goals. Central banks can operate at different levels. National central banks typically set monetary policy and supervise domestic financial systems, while supranational institutions manage policy across multiple countries to foster regional coherence, and each type must balance independence with coordination to meet both local and regional economic needs. Moving into Part 2, we'll focus on the nuts and bolts of monetary policy implementation, exploring the main instruments central banks use to influence interest rates, money supply, and economic activity, and how those choices affect inflation, growth, and lending in the real economy. Central banks primarily use tools like interest rate adjustments to influence borrowing and spending, and open market operations to buy or sell government securities and manage liquidity. Taken together, these instruments steer short-term rates and money supply, translating policy goals into market signals that affect households and businesses. The goals of monetary policy boil down to a few central aims. First, maintaining price stability so inflation doesn't erode purchasing power. And second, supporting sustainable economic growth that creates jobs and improves living standards, both of which are reflected in the images of rising indicators and balanced scales on the slide. Part 3 turns to financial system stability, where central banks act not only as policymakers, but as supervisors and crisis managers, ensuring the banking system remains resilient enough to support credit flows and economic activity even when shocks occur. Regulatory functions include ongoing supervision of financial institutions to ensure compliance with laws and sound practices, together with stress testing to evaluate resilience to economic shocks. These measures help identify vulnerabilities early and ensure banks hold adequate capital to weather unexpected downturns. When markets face severe stress, central banks step in as lender of last resort, providing liquidity to solvent but illiquid institutions, and offer emergency liquidity assistance to prevent runs and contagion, actions that stabilize confidence and prevent temporary problems from becoming systemic crises. Part 4 shifts our attention to currency issuance and management, examining how central banks control money supply, issue physical notes, and increasingly research digital currencies as payment technologies evolve and public needs change. Controlling the money supply still involves traditional processes, like printing secure physical currency, shown in the image of a production press, while at the same time central banks are exploring digital currency issuance and blockchain-based systems to modernize payments and enhance monetary policy transmission. Maintaining currency stability requires active exchange rate management to smooth excessive volatility, and, at the same time, tools to control inflation such as adjusting interest rates and using monetary policy to preserve purchasing power and economic confidence. Part 5 delves into research and economic analysis, the backbone of informed policymaking where data collection, model building, and market monitoring guide decisions that affect the whole economy. Central banks rely on economic indicators like GDP, inflation, and unemployment to assess overall health, while tracking financial market trends such as stock and bond movements, Combining these data streams helps form a timely picture of risks, opportunities, and policy priorities. Policy recommendations emerging from analysis aim to assess the likely impacts of proposed measures and to shape long-term strategies so decision-makers can weigh trade-offs, anticipate side effects, and pursue sustainable growth paths over extended horizons. In Part 6, we broaden the lens to global coordination and collaboration. Since many economic challenges cross borders and central banks work together through networks and forums to manage spillovers, share knowledge, and coordinate responses during global shocks. International relations among central banks are built on networked cooperation and policy dialogue platforms that facilitate information sharing, joint initiatives, and coordinated policy responses, helping to strengthen global financial stability and harmonize approaches where appropriate. Central banks also respond to global challenges through coordinated action on financial crises, which requires rapid international cooperation to stabilize markets, and through collaborative climate change initiatives designed to promote sustainability, manage transition risks, and share technology and best practices across borders. Thanks for following this overview of central bank functions. I hope it clarified how these institutions balance monetary policy, financial stability, currency management, research, and international cooperation to support resilient economies, and invite you to review any section again if you'd like a deeper dive into specific tools or case examples.